Hey there, it's Ryan Skaggs. This is the Mortgage Minute. Thank you so much for tuning in. So hit that like button, hit that subscribe. I would be forever grateful for the subscribe. Trying to hit my goal of 100 subscribers. This was just a little hobby. I was doing extra little videos on the side just for fun, and it's turned into something a little bit more. So now I'm trying to hit my goal of 100 subscribers. So thank you so much if you go down there and click below. So let's get into the update though. So interest rates. The mortgage market has literally been flat for the last 2 weeks, according to Freddie Mac, at 2.73 on the average 30-year fixed. Now, with that said, we have actually seen the market continue to have these ebbs and flows. So to say we've been flat for 2 weeks is really disingenuous. Is that it's really not been flat. So with that said, today being Friday the 12th, we have seen rates rise pure and simple on the back of some news from the Fed, paired with some vaccine information. But this is the one thing I really want to talk about today is the Fed came out and gave their calendar for what they plan to purchase in regards to mortgage-backed securities next week. And why that's important is imagine you come to the trading floor every day. I know it's all virtual now, right? But the old days when the trading floor and they got their little vests on and all their little fancy stuff on their head. That was pretty cool. With that said, imagine a guy that comes in and he is the biggest buyer of mortgages every single day. Buy, 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 right? He's doing all the little hand signs and everything else, and he is buying every single day. That's the Fed. The Fed just told us they're going to take a big cut on what they're going to buy next week. So they publish it out there and tell you what they're doing. So it's not a secret. And that has scared the market. They create artificial demand by buying all those things all the time. And by them saying we're going to buy $1 billion less per day next week, that is going to slowly move down the demand with the same amount or a greater supply, which should push interest rates up. Now, that could be over a short term and not a long term, but we had a really crappy day in the market today. If you were looking and had a floating rate, and then all of a sudden you look to next week, it's probably slightly higher. So typically when we have days like this, a 30 basis point move, that usually equates to about an eighth higher in rate. With that said, there's a lot of nuances that go on, and every single client is different. You got to apply to actually be able to see what we can do. So with that said, that's really the update. That was the big piece of what's going on in the market and something significant that I saw that's not going to catch any headlines. So this is the mortgage market, the mortgage minute. Thank you so much for stopping by, tuning in. Be safe. Those of you in Chicago, greater Chicagoland, North Shore, stay inside. It's going to be super cold this weekend. So we'll see each other again very, very soon. Thanks so much.